Hi guys, welcome to another episode on the trades you missed last week, and this is the UltraFX channel. So on the last episode we projected that price would rally to the upside. Prior to price going to the upside, we anticipated that it would come downward then move bullish at the start of the new week, which is on Monday. Well, before then, on Friday night, we could see that there was a fair value gap here. So let me put this here. So this is the fair value gap here that we're hoping that price would tap into, then move to the upside. After price tapping into our fair value gap, as usual, we would expect that it would create for us a break of market structure here. So it would give us a break of market structure here. So this is our break of market structure here. And also, prior to breaking this high, prior to our break of market structure, it would give us a fair value gap right here. So this would be our entry. So remember that price had tapped into a fair value gap here. So this is our newfound fair value gap here. So this is our fair value gap here. So our entry will be at this newly formed fair value gap. So let's put our entry for a long position here. So this is it right here, and our stop loss would be at this low, at the previous low here, and our take profit should be at the previous high. So this is where we would likely take our first trade profit here. And looking at this, it should have given us a risk reward of 4.53 ratio. So this is our first trade for a week, for the week, and this is on Monday's opening, which is Sunday stroke Monday. The next trade we'll have is also midnight, that same Sunday stroke Monday, and we would see a bullish trade here also. As you can see, we always highlight our fair value gap. Any fair value gap we could find, we would highlight it here. So this is our first fair value gap for the next trade, and we highlight it here. So you can see that price had tapped into this fair value gap on our second trade. The next thing we would look for is a newly formed fair value gap and a break of market structure, as always. So now we have a break of market structure, and prior to that we have a fair value gap here, and also you can see our inducement here. Also, you can also enter with this inducement, but it is advisable that you should enter after the inducement. So this inducement would be our liquidity that price would take before it rally to the upside, and this is how we would enter the trade, knowing that price had previously taken this liquidity and has created for us a break of market structure and a fair value gap. So let's take our entry like this for a long position. So this is our entry, and this is our stop loss here right below this low that created for us a fair value gap. So let me take this out for a clearer view. So this is where we put our stop loss here. We can give it a space for a breathing space here, so the market does not take us out like this, and your entry will be here, and your take profit should be at the high, at the previous high, or you take your profit at this previous high here, the one where we put our first trades take profit here. So this would have given us a trade and a risk reward of 3.73 for Monday's trade at 1 a.m. and our next trade is highlighted here with our fair value gap. So the next trade, looking at this fair value gap, we could anticipate that price would tap into this fair value gap, and after price taps into this fair value gap, as usual, we'll look for a break of market structure and a fair value gap. So we have a break of market structure here. You see how price closed above the previous high, and prior to that we just look for our fair value gap in the internal structure. We look for our fair value gap here. So this is our fair value gap. You can see a space in between that we would wait for price to fill up, and that would have been our entry. So let's use this from this start of this fair value gap to the end of the low. So now we can also see an inducement here. Price should take this inducement prior to tapping into our fair value gap here. So this is our third trade, and this is how we would have entered the trade last week. So now at the start of this fair value gap here is where we would have entered the trade, and our take profit should be here at the previous high here, and our stop loss should be here. This is where our stop loss should be, at the previous low that formed our fair value gap. So this is our entry here, just right below the previous inducement, and this would have given us a risk to reward of 4.63 ratio on our third bullish trade. And moving on to Monday's morning, you can see a fair value gap here. So highlighting this fair value gap, see price taps into this fair value gap, but there's no fair value gap here anymore. After price taps into this fair value gap, this is one trade that would have taken, but because of the missing fair value gap right here, this would have been our entry here, but there was no fair value gap here. So this would have taken a trade here to the upside right here, and you can see how price comes down back and also goes beyond this high, and we wouldn't have taken this trade right here. And that same Monday we would have seen fair value gap formed here. So this is a fair value gap that was formed here. Fair value gap was formed here, and price created a fair value gap here but did not fulfill that breaking of market structure here. So we wouldn't have used this as our entry, but instead would still hold on to price coming back to this area right here, because this whole area is still valid for entry. So after price taps into this area once, would hope that okay, fine, it should also use this as an inducement. Price takes out this previous low inside this fair value gap right here, and created for us a break of market structure as we would have wanted. So this is our break of market structure here. Here is our break of market structure after price closed above this previous high. The next one you need to look for is a valid fair value gap. As you can see, there is a fair value gap here, and remember this is our 5-minute time frame. There's a fair value gap here, a fair value gap here, so we would likely use this fair value gap here for our entry. And you can see a breaker block here also. So let's highlight this for our long position on our fourth trade using this fair value gap right here, and our stop loss should be below this previous low that created that fair value gap, and our entry just at the start of that fair value gap, and our take profit should be at this high right here. You can see our take profits here. So this is our fourth trade here. So it should have given us a risk to reward of 2.91, but for a better risk to reward ratio you would have taken your entry downward, but it's better this way for a 2 to 3 risk reward ratio, and that was our number 4 trade. Then trade number 5, there is a fair value gap here on a 15-minute time frame. So on a 15-minute time frame, we would see a fair value gap here. Let's go on to our 15-minute time frame here. Now we are on our 15-minute time frame, and you can see how this fair value gap was tapped into. So this fair value gap was tapped into, and would move on to our 5-minute time frame to check what has happened here, or what was expected to happen here. As we all know, after price taps into our fair value gap, the next thing is to look for a break of market structure and a fair value gap prior to that break of market structure. So let's go on to our 5-minute time frame. Now we are back on our 5-minute time frame, as you can see here, and we have smaller candles, but right here price had tapped into this fair value gap, and the next thing we need to look for is our break of market structure. As you can see, price went past this previous high here, and created for us a break of market structure and a fair value gap right here. So let me zoom in to show you guys the fair value gap. So this is our fair value gap right here. This space between this next candle and this previous candle, this is our fair value gap. What you need to look for is an entry. So all our boxes have been checked, and we look for a long position right here as price tapped into this fair value gap, and our stop loss should be below this low that created the fair value gap. And we are on our way to our take profit right here. So our take profit should be at the previous high here, giving you a risk reward of 1.82. And this is not bad, because if you had looked beyond this at your left, you would have seen a possible high you can use for your take profits. But this is okay, as it can give you a good profit also. And for a larger risk to reward ratio, you can also move your entry to the order block right here, and moving your entry to the order block right here would have given you a better risk to reward ratio of 2.57, and your take profit is right at this high here. And this is number 5. This is our number 5 trade. So the next one we have is onto our right. So we are going to find our number 6 trade. So fair enough, our number 6 trade is right around the corner, and you can see how price tapped into this fair value gap right here. Let me highlight this fair value gap here. This is a fair value gap here. You can see on our previous trade, a fair value gap was created here. Let me take this one out. You can see this fair value gap here, and all these taps into this fair value gap. So the next one is our number 6 trade. So you can see how our number 6 trade tapped into this fair value gap right here on our previous trade, and created for us a break of market structure here. This is a break of market structure. The next thing we would have on our search is a fair value gap right here, and there is a fair value gap being created here on our 15 minutes time frame. This is our number 6 trade, as you can see here. Well, on our 15-minute time frame, you can see a fair value gap. You can see a clearer fair value gap here on our 15-minute time frame. As you can see, this is a fair value gap. So here is our fair value gap from this spot here. Let me show you from here. to this spot is our fair value gap. So you take your box from here to this end of this low right here, and you drag it here. So this will be your number 6 trade, because on the 15 minutes you can clearly see your fair value gap. So there's no point of being scared to take a trade, because on a 15 minute trade is quite stronger to have a fair value gap than to have a fair value gap on a 5 minute time frame. So this is our entry, like so. Our entry should be here, and our stop loss should be below this low right here, this one that created the fair value gap here. Our entry here, the fair value gap. Always put your mind on that fair value gap right here, and our take profit should be at the previous high. This is your previous high here. This is where your take profit should be. And this would have given you a risk to reward of 3.32 ratio, and this is on Thursday. So the next on our trade list is our number 7 trade, and let's take this one here. Prior to our number 7 trade, you can see a fair value gap here also. This is a fair value gap here, and you can see price taps into this fair value gap right here. The next thing we need to look for our number 7 trade to work out is our break of market structure right here. This is a break of market structure. See how price crossed above this previous high, and we need to search for our fair value gap. There's a fair value gap here, but it's quite obvious to find the fair value gap closer to our low at our 5 minutes time frame. So let's go on to our 5 minute time frame here. So now we have for us a fair value gap here on our 5 minute time frame, and this is our number 7 trade, remember. So this is our number 7 trade. We have a fair value gap here, so we take from this spot of this fair value gap to the end here as our entry, since we have for us a break of market structure here. You see price breaks above this high and also above this high, giving us a signal for a bullish trade. So as price taps into this fair value gap, remember that this fair value gap was coming from this previous fair value gap we found here, so it should have been a strong trade for us. So this is our entry. This is how our long position would be like. From this spot here, we'll take our entry, and here is our stop loss. So now from here to this spot is where we'll put our take profits. So for a higher risk to reward ratio, we can use the order block as our entry, and our stop loss remains the same, or we add more breathing room for our stop loss. And you can see how price rallied to the upside to hit our previous high right here. So keep your chart clean, and you see how price rallied to the upside and tapped our take profit right here on our number 7 trade. Then the next trade we have on our list is our number 8 trade, and remember our number 7 trade was a risk to reward ratio of 3.16, being fair enough for a good ROI. So our number 8 trade is this. Looking at this, there are no fair value gap right here. There are no obvious fair value gap, and remember we are on our 5 minute time frame. So we need to look for a fair value gap that is quite obvious. So we have one for us here. This is our fair value gap, and we anticipate that price will tap into this fair value gap. After price tap into this fair value gap, the next on our list is to check for a strong break of market structure. So this is the structure of the market being broken here, and you can see how price closed above this previous high. The next thing we need to look for is obviously our fair value gap here. So we have found a fair value gap for us, and this should be an entry for us, and our stop loss should be at the low that created this previous fair value gap right here. This low created this fair value gap, so this is where we would put our stop loss, or you can put it here for a breathing space. So our enforcement is this previous fair value gap here, and we have a fair value gap for entry, and we also have a break of market structure. So that is a good position for a bullish trade again. So now we have our entry here, you can put it here, and stop loss right below that low. The next we have on our plate is to eat, and you take profit to the previous high. So this is your previous high here, and you can see how price rally to the upside, giving you a risk reward of 2.22 risk to reward ratio. And if you want a more bigger risk to reward ratio, you take your TP up to this high here. At this high, you can see your risk to reward ratio is going to be about 3.7 risk to reward ratio. So now this is at the at Friday's close, and there was a trade here at the end of Friday, and we have a 3.7 risk reward ratio on a bullish trade. So guys, I hope you took trades, last week trades, and the other trades we didn't take, we have back tested it together, and we'll meet on the next episode on the trades you missed last week. Feel free to go back to the Forex basics to understand what we mean by the breaker blocks, the order blocks, and fair value gap, to have a grasp at what we are actually doing here, because that is what most of our strategy is all about. And we'll meet on the next episode. Have a great day and peace.